video up for you. So in section 1, we just showed where the increases and decreases were going to be for the accounts. Now in section 2, we're actually going to deal with some money, and we're going to show which side of the T-chart the money is going to go on. So, prepare two T accounts for each transaction. Then on each T account, write the title and what's going to be affected. Then step 2, write debit or credit amount in each T account to show the transaction's effect. Okay, we got that. So, transaction 1 for April 1st. Received cash from owner as investment, $5,000. So we received cash. So put cash there. So now we've got the $5,000. Now if you remember, I'm just going to go back, instead of finding the example in here. Remember when we have an increase, we had a cash increase, right? So our $5,000, you see the site the increase is on? Our $5,000 is good to go on the left side. So let me see. This was different. See, we had increase in cash. It went in on the left side. And remember, the debit column is always the left and the credit's always the right. So we had our increase here. So that's where increase was. So that's where the $5,000 goes. So then we also had from owner's investment. So that one's going to be the owner's capital account, where it's the first example in the chapter. Capital account. So let's see, find the owner's capital account title up here somewhere. Here it is. Kathy's Capital. So we'll write her last name, Burgum. Capital account. And then going back to chapter 1, because this is going to be on the owner's equity side of the equation. Remember, they have an opposite effect on the changes. So for our capital account, we had an increase in capital because that added money gives the owner more equity in the business. So the $5,000 increase is going to go under the credit column for the capital account. So $5,000. So then the next one, paid cash for supplies. So we've got there's our two account titles, cash and supplies. So you can write either one first. All right, supplies on here. So our supplies, we have an increase in supplies. Remember, so amount of our supplies goes up. So that's going to be an increase. Increase is on the assets, or supplies is on the asset side. So that's going to go over on the left side. Oh, wrong side. $50. And like I said, for each one of the transactions, they have an example in the book. paid cash for supplies. We show an increase in our supplies. So that's on the left side, on the debit side. They're going to have a decrease in cash because we paid the cash out. So that's going to be on the credit side. So cash decrease was on the right. So there's our decrease. Okay, so now we'll go down to April 5th. Paid cash for insurance, $75. So those are our two accounts, insurance and cash. So I'll just go ahead and start with the insurance. Insurance is, anybody want to volunteer the answer for that one? What's insurance count as? Right, it's an asset. All of our assets. If you remember on our side of our credit and debit and credit side, the increase in assets goes on the left side into the debit column. So $50. Oh, is it 75? Thanks. So I was looking up here at supplies. 75. That's why if I do these in pencil, they don't hardly show up at all, and I do them in pen, I make a mistake, I can't fix it very easily. Okay, so $75 on the debit side. So now we're going to make an account for our cash. So we got our 75 over here. Most of you, putting two and two together. 75 on the credit side because that's where we had our decrease. Okay, so that gets us to April 6th. Bought supplies on account from Bales Supplies. So we've got our two accounts are going to be supplies, so we're going to have a supplies account. And we bought them on account. We didn't pay out any cash. So that's going to be an account receivable or payable? Right, payable. Everybody said payable. So it's an account payable. So I'll start with supplies. I'll just go ahead and write it up here under April 6th. So make sure I get the account right. Bought supplies on account $100 of the amount. So our supplies, our value goes up. So remember for assets, all the increases are on the left side. So I had an increase in supplies. And then I'll write AP for accounts payable. And it's from Bales. So all right, accounts payable Bales. Bales is this accounts payable is a liability. Our increases for all liabilities all go on the right side. So $100 there. So you can see, everything as a counterbalance. So that gets us to number 9. Paid cash on account to Bales, paid $50. So our two accounts again, we got cash, and we paid it on an account, so that's an accounts payable. So either one you want to start with, I'll just start with accounts payable. Bales. So if we paid the money on the account, so our account balance is going to go down. So if our increases are on the right side, our decreases are going to go on the left for anything that's a liability. So that was $50. And then our other account was cash. So we had a decrease in cash. So if all of our increases are on the left for liability or for assets, our decreases go on the right. $50. So another way to look at it too is if this is still throwing you off a little bit, you know, if you parse out each transaction, whatever happens on one side for one account, for both of the accounts that are affected, the other account it's going to be on the other side. So this way, or like on this one, they're all like that on this side. So there's the work together for section 2. So I'll leave that up. So finish the on your own for section 1. Move on to the on your own for section 2. Finish that up after lunch by the end of class. That's all we're working on today. If you still have worksheets to